Yo, what's going on, guys? Welcome to week 4 of the Silver Bullet case study, where we go back and we backtest the Silver Bullet from every day of the week without any sort of news bias, any sort of daily bias. We're simply going off the principles of the strategy alone, and we're going to do that together again this week. And I hope you guys are ready. First thing we're going to do is go ahead and mark up all of the Silver Bullet hours so we have those ready to go when we get to them. So I am on the central time zone, guys, so that is 1 hour ahead of New York local time. So when you see me marking up 9 a.m. up to 10 a.m. Central Standard Time, that is my Silver Bullet hour. Still the same Silver Bullet hour. Just know that I have my TradingView chart calibrated to Central Standard Time, and then obviously the PM session is going to be the 1 p.m. to 2 p.m. Central Hour for me. Now, we're not going to be able to mark the PM session for Monday because, as you guys know, Monday was Memorial Day, and I didn't even trade, and I'm hoping that most of you guys didn't trade either. So the market was only open for even half the day anyway, and very little volume, as you guys can see, almost no movement whatsoever during Memorial Day. So I'm going to say we're going to go ahead and actually just skip that. Because there's really no point in marking that up. So just ignore that I just marked that up, and we'll go right ahead to Tuesdays. All right, great, guys. So we have all of these hours marked. Now we're going to go ahead and jump back into replay mode. And again, we're going to start at Tuesday because Monday was Memorial Day, and we did not trade it. And I wouldn't have expected anybody to trade it. If you did, I'm just going to say consider not doing it next time. So that's really all I got to say, guys. All right, so let's take a look at what we got. Again, we're not using any bias whatsoever, and we're going to keep score like we did last time. So starting off this Monday Silver Bullet hour, we see price immediately expand to the downside, but we don't really have a buy side liquidity sweep, right? We've just been continuously sweeping sell side, so therefore I personally wouldn't be looking to take any shorts from these gaps right here. There's definitely fair value gaps right here, but again, there's not really a super buy side liquidity. This is not buy side liquidity in my opinion. It's the 1 minute chart. All we've got is we've got one bullish candle. These are just dojis. So this is not like a liquidity sweep in my personal humble opinion. You guys can let me know if you guys disagree. So for me, I'm waiting for a bullish displacement and fair value gap, which we do get right here. So right here, we can mark this up. Here's our fair value gap. Mark up our long position entry right at the gap. We can put our stop below this low, even give yourself a tick of room because we're still below that 5 handle stop loss that we want to be within, and then 5 handles for take profit 1. Now let's see if this comes back and triggers us. It does right there. So we're in the trade and we're waiting to see if we get stopped out or if we hit take profit 1. So we chop around. We do hit take profit 1. Take profit 2, you could either do an even 10 handles. We'll just do that because this 10 handles would be right inside of this 1 minute order block. I like that. So let's just see if we hit it. We do hit it. Does it take out this high? I don't remember if it does or not. It does not. Okay, so we hit 10 handles, roughly a little over 10 handles, and then we come back and we get stopped out at break even. And truthfully, I mean, you probably could be done for the day. Just for sake of the video, let's see how this plays out. Where we go from here. So we sell off even more. We take out more sell side liquidity. Again, we take out sell side. We really didn't take out buy side. We did right here. But then we came down and we took out this low. So honestly, I'm willing to play buys again. If this fair value gap had been pulled back into like in these candles, we could have played that going short, but obviously it didn't, and we were still in this long position, so therefore I don't believe you would have been entering that trade. So we'll chalk this one up for a 10 handle win right there. And let's see if there's a 1 minute fair value gap for another entry. So I would include the gap here. I would also include, if I could, this volume imbalance, just depending on how you want to play it with your stop loss. So if we put the entry right there and put our stop loss below the 3 candle sequence, could do that. 5 handles would put you down here. Maybe you want to give yourself some extra room and be below this candle. So we'll just do that because we're still below the 5 handle mark. Okay, so let's see if we even get a pullback into here. We do. So we pull back into that, and we could have gotten long right there. Let's see what happens from here. Price does sell off, and you would have taken a loss had you been trying to get long from this fair value gap. And let's see how the hour ends. So the hour ends like there, right there, and you're not looking to take any more entries. So I would say for Monday, you had a possible 1 win, possible 1 loss. And just for fun, what if we measured from this open of this fair value gap, which is where this candle reached into? It definitely gave another 10 handles down. So depending on your guys' bias and the way that you guys perceive the market, you might be looking at these examples differently than I am right now, and that's totally fine. The way that I would have perceived it is kind of the way that I just interpreted it to you guys, which is the fact that we ran up, and obviously we took buy side here, but then we displaced lower. And then once we took out this low, to me, this was a sell side liquidity sweep and then a movement higher. So I wouldn't have been interested in playing this gap, but some of you might see it differently, and some of you might say, hey, this is a market structure shift down here, and this is a fair value gap, so I'm willing to sell it there. And that's totally fine. If that's the way that you guys interpret it, for you guys that watch the video and you see it this way, I do want to include this because, again, your interpretation might be different than mine, and the way that you see the market might be different than mine. And that's why sometimes trading educational videos can be so, I don't want to say controversial, but for lack of a better word, I'll say that, because sometimes what somebody sees myself might be different than what you might see. So you guys can let me know in the comments if you guys agree with this, disagree with it, if you would have taken this short, if you wouldn't have taken the short for for Tuesday. But it's up to you guys. But this definitely could have been considered a win because you were stopped out of this position already at break even, and you would have been in this position, which obviously would have kept you from taking this buy. So I know that is like kind of confusing in the fact that I'm making it so cluttered. I don't even like that, to be honest. But let's chalk up Tuesday like this. So Tuesday, we've got for sure 1 win, right? We got for sure 1 that is constant across the board. But you could have possibly been 2-0, possible, on the 1 minute time frame, right? Or you could have been 1-1. And I'll also say possible. The nice part is that 1 win would have been 10 points. This would have been 10 points right here. And this win right here would have also yielded you 10 points if you were looking to get, if you were looking to get short from this fair value gap. You could have gotten 10 points. Stop loss wise would have been a little bit more challenging. If you would have entered off the beginning of the gap, you could have done just a 5 handle max, or you could have done 1 tick on the other side of this fair value gap candle. That would be kind of up to your discretion in the way that your risk management, the way that you prefer it. But that's why I'm chalking it up as possible, right? Because there's so many discrepancies for how you could have traded it. Maybe you would have traded it differently. I don't know. Monday was kind of, clanky. For us personally, we took a loss on Monday. For Tuesday. I don't know why I keep saying Monday, because it's the first day that we're back testing. But yeah, Tuesday, we'll leave it like this. Possible 2-0, possible 1-1. Let me know how you guys would have traded it. Truthfully, don't lie. Don't just say you would have taken the sell here because it sounds good and because you already know what happened. Like, be honest. The way that you look at the market, how would you interpret it? Would you have wanted to get short here because you saw this as a market structure shift? Or would you see this like a liquidity sweep and you'd be looking to get long? And in that scenario, if you were looking to get long, right, maybe you noticed that we didn't even break this low, and then maybe you're looking to get long inside of this fair value gap. And I'm going to include it because I already know most of you are going to be like, hey, Tyler, you forgot the fair value gap on this candle. So let's actually include that too. Why not? Why not? Make you guys happy. So I'd go below this low, 1 tick below, 4 1/4. Let's see if it gets 5 handles out of this. So no, you would have been stopped out there too. So now, for those of you guys that are really picky, I got to include this now. I got to include a possible 1 and 2. You guys. Possible 1 and 2. So let's get through all of these days, guys, and then we'll go back and look at the different time frames, okay? let's get over to PM session. So here we are, Tuesday PM session, and we already see price sweeping this sell side liquidity. And at this point, we want to see some bullish displacement in order to get long, right? So let's see if we get some bullish displacement with a fair value gap opportunity. So we're looking, nothing yet. Still nothing. There we go. Oh, spoke too soon. Still really nothing up until this candle. Okay, great. So here's the clean, clear-cut volume imbalance. You could include this, I'm sorry, the fair value gap. You could include this volume imbalance if you would like to. Because we've expanded a little bit from the low, I'm not going to include it because I don't really feel like it's super necessary. And if I could, I'd want to be below at least this candle because this is kind of the low of this last impulse to the upside. So 4 3/4 under 5, that's totally fine. 5 handle TP1 right there. If you wanted to do a little bit lower entry into the gap, that would obviously be kind of up to you. But let's see if we even get the pullback into there. We do right there. Price pushes, we hit TP1. Great. So 5 handles hit. And now targeting potential TP2 could be like right here at 8 1/4. Or you could just say, hey, I want 10 handles out of here, which would be right before we get to this high, but right above these highs. So let's see what price wants to do. Price does give you 10 handles. Does it pull this high? It does. It actually takes this high right clean out, I think. Yes, it does. So it gives you 11 1/4 right there. Beautiful. So if you would have targeted 5 handles, this high, either way would have worked out. And where did we go from here? We went a little bit higher up. And then by the end of the silver bullet hour, you're either still holding or you're fully out of the position with your TPs. That would kind of be up to you. But for sure, Tuesday PM session is a winner. Tuesday PM 1-0. Beautiful. Not much more to do with that. Let's get over to Wednesday. So here we go. Wednesday AM session, silver bullet hour. Let's see what we get. We see price push down. What does it do? Grab a bunch of relative equal lows. What do we want to see? Displacement to the upside. Are we getting it on this candle? Doesn't look like it. No, still nothing. Now we got potential displacement up. Let's see if this holds. We don't, but we do have a gap here. So depending on, again, your discrepancy of the market, the only reason that I would be open to maybe getting short would be because of this huge wick right here, taking out all of this buy side liquidity and then also filling this gap. So to me, that could also be looked at as your liquidity sweep with a higher time frame. And if you were looking to get short because of that, you could use this gap, or you could use, obviously, this gap. So, again, let's just play everything for the sake of the video. And let's say that you were going to get short here in this fair value gap. Put together your short position. Stop right above this high, 3 1/4. 5 handle, TP1. Price did come back on that next candle, trigger the entry. And boom, TP1 got hit. Very nice. And then we sell off. And I guess we'll see how far we drop off here. And then we'll wait for price to turn. Wow. We'll wait for price to turn back around before we stop tracking it lower. So, okay, great. So it looks like it gives you about 16 handles. 16 handles down. Totally amazing. That's awesome. So now we got potential displacement up. So that got closed in. Nothing yet. Ends up giving you even lower prices. Let's keep tracking this. See how far we get down. Oh. So now we're at 17 1/4. Waiting for that displacement up for a potential buy now. There we go. Fair value gap right here. Setting up the long position. And again, this is assuming you're playing everything, guys. So stop right below. You could even use that wick right here. So 3 handle stop loss. Pretty tight stop. 5 handle TP1. Let's see. Triggers you in on the next candle. And looks like you got stopped. And even if you had a bigger stop loss, probably doesn't matter because we just keep selling off. So even if your stop was stretched all the way below here, still doesn't matter. You're just adding on extra risk for no reason because this gap was not going to hold. So looks like you could have had a massive win for 17.25 points, or you could have had this loss. So let me know if you guys would have taken this short here. Be honest. Don't lie. You're only cheating yourself if you lie about the trades you would have actually taken. I will let you guys know. I'm telling on myself, I didn't take this trade. The reason I didn't take this trade is because I was viewing this as the liquidity sweep and I was waiting for bullish displacement up. So I wasn't even interested in playing this, but I was wrong. I was wrong on Wednesday, and because of it, we actually ended up taking a small loss for about 2 handles because we got in on this trade. This was a huge candle down, obviously, an engulfing bearish candle, and we market executed. So when I clicked buy, price had already shot through this gap, and my entry actually ended up becoming basically the close of this candle. So my stop loss was only two handles, so nothing crazy. But I'm giving you guys my honest trading results from this week because I want you guys to be honest with your back testing. Okay, don't say you would have shorted this if you really wouldn't have shorted it. But I can understand in hindsight why somebody would have, right? So I wanted to include that in there. And yeah, that is how the Silver Bullet Hour went for Wednesday AM session. So let's go ahead and track that. Wednesday AM, you've got potential 1-1. But the one win is obviously ginormous, right? So that's something to just keep in mind of that, guys. We're not going to keep track of all the points on this running total. I just want to keep track of win rate. And this is obviously on, again, the 1 minute time frame. My guess is this loss would be eliminated by looking at the higher time frames, but we'll see if this win would have been included if we're looking at the higher time frames. We'll come back to that. But let's get over to Wednesday PM session. So here we are, guys, Wednesday PM session. Let's play this thing out, see what we got. Nothing yet. We're seeing this high start to get taken. So now let's wait and see if there's any bearish displacement. There we go. We have displacement down after the buy side liquidity sweep. Here's our fair value gap. Short position right here. Stop loss just a tick above that high, 3.25. 5 handle, take profit 1. Triggered in. Chopping around. Ooh. Almost hit stop loss. Boom. TP1 gets hit. Here's 10 handles right there. See if that gets hit as well. Chopping back around. Still hasn't come back to entry yet. There. So boom. Out at break even. Gave you a max profit potential of about 8.75 handles. Never really gives you that 10 handle take profit 2 if that is what you were holding for. So Wednesday PM session 1-0. Now let's get over to Thursday AM session. All right, guys, Thursday morning AM session with this macro. We see that price has already taken out sell side liquidity in the macro right before Silver Bullet Hour. And you're starting to see price displace up with a fair value gap right here, but we're before the hour. So you're breaking the rules if you take your entry off of this fair value gap. But can you be bullish? Yes, you can. Why can you be bullish? Because during the macro, which is 10 minutes before and 10 minutes after the beginning of the hour, we've already gotten our run on liquidity. So we'll wait and see what we get. We've got price pushing higher. And all we want to see is some displacement with a fair value gap in order for us to find an entry, which we're not getting anything right now. So let's wait and see. So price goes up and starting to retrace back down. Now here's a fair value gap, doesn't get pulled back into. Here's a fair value gap, doesn't get pulled back into after this buy side gets taken out. So there's no trades right here, guys. No trades right there as of right now. But keep in mind, I am still bullish. Why? Because this is our sell side liquidity sweep, followed by, some might say yes, to a liquidity sweep here. Others might look at this as market structure shift. So let me know in the comments again, guys, if you see it the same way. But even if you were looking to short here in these gaps, doesn't look like you have any entries. So I would be looking again for some bullish displacement for us to find our entry. So here we go. Here is the gap right there. Setting up the entry. Long position. Like that. You could go right below this 3 handle sequence. Something like this. 3.5 handles. Targeting 5 handles for your TP1. Price triggers in. Hits TP1. Great. This high would have most likely been your TP2. That got hit. And then from there, you could obviously go and extend for higher take profit levels, like this high right there, for example. Let's see if that gets hit at 13 handles. Yes, it does. And then if I remember right, price just absolutely rips the rest of the day. So you could have caught a huge runner on Thursday, and that was during AM session. So Thursday AM session, let's go ahead and mark this up. Thursday AM 1-0. Fantastic. And let's get over to Thursday PM session. So here we are, Thursday PM session. For those of you guys that are interested in knowing how far price ran, let's take a look. From AM session, price ran right before the PM session. At that point, about 42 handles. So that's the runner that you could have caught if you were holding all the way to PM session on Thursday. But as far as Thursday goes, what I'm now seeing is that we're running buy side. We're running buy side liquidity leading up to this hour. So for me, it'd be waiting for some sell side displacement, fair value gap. So here we go. Fair value gap right here. It's tiny, but there is one. Entry right there. Stop right above this high by a tick. Literally only 2 handles. That's perfect because it's such a small stop loss. Getting hit, stopped out wouldn't really hurt that much. But we'll see how this plays out if price pulls back into it. It doesn't pull back into it, but you do get another fair value gap right here. So again, you guys can let me know in the comments if this fair value gap is one that you would take. For sake of the video, we're going to use it. Why? Because we're still well within our stop loss rules. We would have to change our TP1 though, down just a little bit further in order to collect those 5 handles. So let's see. So price stops us out. Doesn't matter which one you use. You took a stop loss. Okay. So for me, I wouldn't be interested in going long here. To me, this isn't really a sell side liquidity sweep, but we are seeing price push up a little bit higher and take more buy side. So what I would do is I would wait and see if I get any more bearish displacement, which I do get. So you have a gap here, you have a gap here. I would use this gap because it's right at the bottom of this breaker. And again, it would still be well within our risk management rules. So we could be above here, 2.5 handles, still a very small stop loss. These PM sessions were very slow. And now let's see how this plays out. So price triggers in. You actually could have got this fair value gap if you were really, really picky for some reason. And let's see. What are we going to do? What are we going to do? Boom, stopped out again. So PM session, we just maintained bullishness the entire hour. Maybe you guys would have played buys in here if you're bullish. But for me, just being honest, this would have been 2 L's. I wasn't trading PM session because we caught the buy from AM session, so I didn't trade PM session. But Thursday PM, if you traded it, to me, you're 0-2. That's my opinion. So now let's get over to Friday NFP morning. All right, guys, Friday morning, NFP day. Let's see what we get. Price is starting to push down. Grab some sell side liquidity. There you go. So here's the sell side liquidity sweep. And now waiting for some bullish displacement to the upside. Here's our first fair value gap on the 1 minute time frame. Let's set up the trade. Long position, boom, right here. Stop loss for me would go right here. 4.25 stop loss, 5 handle, take profit 1. Let's see if we pull back into it. We do not there, and we still don't. We push higher. We actually have another fair value gap that forms right here on the 1 minute. And let's see if this one gets triggered. On the next candle, yes. So this one does get triggered on the very next candle. Fantastic. So entry here. Stop loss would probably go below this 3 candle fair value gap sequence. So I would do like that, 3 handles. And then I would target 5 handles for TP1 as usual. So let's see what happens. Boom, TP1 gets hit. Fantastic. And now looking for take profit 2. You could just do, like I said, an easy 10 handles if that's what you want to do. Looks like that does not quite get hit. Do we get stopped out? Yes, we do. So there you go. 1-0 so far. And let's wait and see what else we get. So boom, here's another fair value gap. And just for sake of the video, let's say that you weren't happy with your 1 win and you wanted to get in again when price came back. And what I would do again, about a tick below this low, 5 handle, take profit 1. That's great. Let's see what happens. Do we get triggered in? Yes, right there, triggered in. TP1, targeting this high for TP2. Then that gets hit as well. And then I believe we pushed the rest of the morning as well. So you could have caught another nice runner for AM session on Friday. Now let's go look at PM. Here we are, guys. Friday PM session, last silver bullet hour of the week. And this runner from AM session, had you held it, gave you a potential of almost 31 handles. Not too shabby. Now let's go ahead and look at what we got cooking for this PM session. So let's get into it, guys. Price is looking like it's already slowing down based on this price action. I want to see if there's anything that is, concrete. And, here you guys have this run on liquidity right here. But you don't really get a market structure shift below this low, so maybe you wouldn't really consider this. But you do have a fair value gap right here. And I want to see, so price does start to sell off pretty strong in here. And the way that I would play this then, now that we've gotten a shift below these lows, if you're looking to get short after the huge run during the day, we have the benefit of hindsight during PM session of knowing what price did during AM. And if price ran up, guys, let's use common sense. If price ran up 40 some handles during the morning, then odds are we're probably not going to just continue bullish for PM session. It's just probably not going to happen, especially if you guys understand the power of 3. So I'm just going to use some common sense here and say that you're probably looking at all this as buy side liquidity being taken, and we're looking to most likely play shorts during PM session if we can get some displacement, which we are getting right here. So the way that I would play this, guys, is let's follow this with our gone box, and we only want to look for fair value gaps inside of a premium price range. So we'll track this as price starts to come back. Okay, we can move this down a little bit. Okay, so great. So this fair value gap is not in our premium price range. Therefore, I would not be taking it. But I would take this one because it's the very first fair value gap right now that is inside that price range. So let's anticipate that for right now. Short position, bang, stop loss. We could put it all the way above this high, 3.25, targeting 5 handles for take profit 1. Fantastic. But let's keep tracking this. Let's see if we even get it. Boom, price comes in, hits the entry. Where do we go from here? We actually go up even higher to hit this fair value gap. If you were Somebody that really wanted to wait for that fair value gap. Let's see, bang. So stop loss gets hit. Stop loss gets hit. And that's if you're using my thinking, which is the fact that we're most likely not going to head higher. Am I wrong in this backtesting video? I am wrong. And I'm okay with admitting that. That is totally fine. So for sake of the video, we'll chalk this up as a loss. I'm still going to count this as a loss, guys. But what I'm going to do now is I'm going to play this as if you guys were looking at this as sell-side liquidity sweeps and you were looking to get bullish. So here you have a fair value gap. Doesn't get pulled back to. So that's out of the question. Doesn't get pulled back to. There's no more fair value gaps in here. Nothing, right? But now you have a fair value gap right here. And I want to play this the same exact way. Let's be fair. Let's be fair here, guys. So mark up this fair value gap. Does it trigger? Does it go up higher? Yes. But would you have taken it? I'm going to argue you wouldn't have taken it if you are actually putting these pieces together, which smart money is required for. Drawing up the box. Let's go back. Let's jump back in replay mode so I'm not psyching you guys out. Oh, I didn't go back far enough. Let's cut these candles off. I really want to give you guys exactly what I'm talking about here. So when price starts pushing higher and then it starts retracing, that's when you can drop your gone box. Now, we understand that price is not in a discounted price range. This fair value gap is, this fair value gap is not. So if you were going off of this low to this high, not in a price range. If you're a little bit more of a risk taker and looking for every excuse to get in every entry possible, maybe you fibbed it up here. Okay, I'll give you guys that. Long position, you'd put it right on that level. It's not letting me do it, but that level is 290.25. So let's just make sure this is right on 290.25, which it is. Okay, great. So it's there right now. Stop right below there. And targeting 5 handles. And I'm going, this is, again, guys, this is the super aggressive entry. I would not enter this trade. I'm just doing it for the video because I know somebody's going to mention it and somebody's going to say, I would have entered there. There's a fair value gap right there that works, right? So I'm doing it for the sake of the video, and I just want to make that abundantly clear, okay? I would be waiting for this fair value gap, if anything, and if I didn't get it, I wouldn't be getting in a trade. But here's how we can play. Let's see if we get 5 handles out of this. For you risk takers, you did. You lucky sons of guns. You got 5 handles out of that. No way. And let's see what happens from there. And it's after the silver bullet hour, and it looks like price kind of just chops, and you would have been stopped at break even anyway without probably hitting a TP2. It only gave you an extra 2.5 handles from that point. But okay, great. So I would have not taken it, but for those of you guys that would have, there you go. And Friday PM session would be you would be 1-1 possible, right? 1-1 possible, because this would have been a loss, but then you could have been bullish and gotten a winning trade out of that. This is all on the 1-minute chart, by the way, guys. So that's where we're at for that. Now what I want to do is let's actually take a step back and let's go look at the higher time frames. Let's reset our chart. Let's go look at the 2-minute time frame. Let's scroll back to Monday. JK, I meant Tuesday because we didn't trade Monday for Memorial Day. And let's go look at these fair value gaps that we have marked up, and let's see if there's anything different whatsoever, okay? So if you're looking at Tuesday's price action, 2-minute time frame, is there any fair value gaps? No. No fair value gap right there. If anything, there's one right here, and that would have been a loser. But this one fair value gap right here that we have drawn up does get triggered into, and looks like it would have given you that 5 handles. So there's a possible win right there. And then there's no fair value gap right there. So nothing really much different on Tuesdays. Tuesdays, if anything, you're 1-0 from the 2-minute time frame for Tuesday AM session. So let's go look at Tuesday PM session. Now that same fair value gap that we found on the 1-minute chart is available on the 2-minute chart, And you actually had a lower fair value gap here and here that never got triggered into. But if you had them marked up and you were just evolving your trade as you go, then you could have caught the same fair value gap that you found from the 1 minute time frame. But either way, still record holds Tuesday 1-0. Now let's get over here to Wednesday AM session, 2 minute time frame. How do we look? Looks like you have a very tiny fair value gap. Actually, this changes. And this fair value gap would go from where it is currently to actually right there. Wow. But what's the problem with that? The problem with that is that entry would be before silver bullet hour. Can't count it. Nothing there. This fair value gap that we actually caught the entry from during the hour, there's no fair value gap on the 2 minute. And let's see if there's any fair value gaps on the 2 minute that you could have caught. You could have caught this one, but you sold off so far at that point, I would argue that you wouldn't take it. So it is what it is. And then you wouldn't have taken this trade. So Wednesday would have been a no trade on the 2 minute time frame. Not bad. No harm, no foul, right? Now let's get over to Wednesday PM session. We're 1-0 on the 1 minute time frame. And on the 2 minute time frame, you don't really get a bearish displacement until right here. So you would have had to target a different candle altogether. If your stop loss was still above this high, which it very well could have been, then you would have been good to go still, and you still would have caught a win. So if anything, you're still 1-0 for PM session on Wednesday. Now Thursday AM session. Let's go look. This is the first big runner. And Thursday for AM session, we're looking for, again, guys, a 2 minute fair value gap. Now your fair value gap looks like would have been relatively in the same spot, but you'd have been targeting right here. And let's see how you would have had to have played your stop loss. Let's say you entered kind of at like the 50% or even the close of the gap, because you got the whole gap filled. And let's go to 5 handles max. So boom, 5 handle max. You'd have had a more drawdown, but you could have definitely gotten away with 2 handles. Again, either way, we're going to chalk that up as a 1-0 win. Now Thursday PM session. Let's go take a peek. We were 0-2 on the 1 minute time frame for this session. Pretty terrible. But if anything, you saved yourself from getting short here, so that saves you from a loss on the 2 minute time frame. And you could have gotten long here, which maybe you took a win. So if anything, it saved you from a loss and maybe put you in a winning trade if you were willing to get bullish from here. I would argue that you weren't willing to get bullish, but that's just me. You guys might have a different opinion. Now, finally, let's go look at NFP Friday AM session. So AM session, what are we looking for, guys? So we see still this sell side liquidity sweep. Fair value gap right here. Doesn't get pulled back into, so we end up not catching this trade. Fair value gap. Not really anything there, so it keeps you out of that one, but this one is still all the same, so you still end up 1-0 from Friday AM session. And I realized that I never actually marked that up. So I would say Friday AM session on the 1 minute is what we're counting, guys. We're going to say that's 2-0. And just know that you would have been a possible 1-0 on the 2 minute time frame. So no big deal whatsoever. And then finally Friday for PM session on the 2 minute time frame. Let us take a look. And remember, we were taking a losing trade if we're getting short right here, which is totally fine. That still would have been the case on the 2 minute. Even if you were waiting for a 2 minute displacement, you would have still got short here and taken a loss. So still a loss right there. Now, as far as taking a winning trade goes, that same fair value gap on the 1 minute was also a fair value gap on the 2 minute. So again, still 1-1. The record does not really change all that much, right? So let's go ahead and let's scale out to the 15-minute time frame, guys, and let's go and tally all of these up, okay? So we got Tuesday AM session and Tuesday PM session. Now, obviously, Tuesday, you guys will have to let me know what you guys think the record for Tuesday should be for yourself. And what I would say is I'm just going to chalk it up as a 1-1. You know, I'm not going to pad the stats. I'm not going to take the extremes either. Let's just go right in the middle, 1-1. And then Tuesday, 1-0. Okay, so we're at Tuesday for silver bullet all together. All in all, we've got basically 2 and 1 for Tuesday, right? And then Wednesday comes around, 2 and 1. We're at a 3 and 1, and now we're at a 4 and 2. So 4 and 2, all in all. Thursday, 5 and 2. Now we're 5 and 4. Friday, 7 and 4. With PM session, we're 8 and 5. So 8 and 5 overall record for the week. And you guys let me know if you guys come to a different win-loss for yourselves. But 8 and 5 total win-loss. Not a fantastic win-loss ratio by any means. But still 8 and 5 total. And I'll just be honest with you guys, it was definitely a harder week, but that was to be expected because we had a shorter week. So we had Memorial Day, and then we also had NFP on Friday. So it just causes more of an improbable market condition as a whole for this entire week. And, you know, I will admit it was a little bit harder to come up with even a bias for the early part of the week. Once we got through to Thursday and Friday, honestly, the draws on liquidity were a lot clearer. The bias was a lot clearer. Obviously, this video is trying to take all the bias out of it and be able to just look at the principles of the strategy. And that is a little bit of the only part that's hard about making these videos is I just got done trading the market for the week, and I know exactly what my biases were each day. And I'm trying to keep as much of that out of it as I possibly can because I'm really wanting to make these videos as non-biased and as, you know, straightforward and as accurate as they possibly can be. So hopefully these are helping you guys. It sounds like they are. I'm making them still because the feedback that I've been getting on them has been positive. But yeah, I will admit this week was a little bit tougher, and even just by going through the examples with you guys, I'm assuming you guys felt that as well, and obviously it's reflected in the win-loss total for the week. But the good news is a couple of those winners gave you huge potential runners, and you could have caught 30, 40 plus points on a couple of those, which absolutely would have made all those losses feel like nothing, especially since a few of those losses were really, really small stop losses. So to me, I think the 8 and 5 win rate total does not do this justice for the week because the potential winners that you could have caught were pretty big, and they would have eaten, you know, those losers and then some on top of it. So that's really all I got to say. The win rate wasn't super high this week, but the winners that you did catch definitely made it count, right? So I'll leave it at that, guys. Hopefully this video helped you. Like it, share it, comment on it down below. Let me know if your record would have been any different, if there's trades that you don't agree with, trades that you wouldn't have taken because of, you know, whatever the case might be. Like I said, we all see the market a little bit differently, and that's kind of the beauty of Smart Money Concepts is the fact that we are all still individuals, and what I might see might be different than what you might see and vice versa. But that is, at the end of the day, why we end up having a bias and incorporating that into our trading plan as well. But again, for the sake of the video, we're just doing this straight up, no BS, no funny business, and just getting right to it, guys. But with that being said, I'm going to leave it there. Hope you guys had an amazing trading week. Let me know how you guys did in the comments down below, and I will see you guys for some more live trading recaps in sessions next week. Peace out. Till next time.